Hi, I'm Kevin Price with your Price Point Edition. Do want to remind you to check us out over there at priceofbusiness.com, home for the Price of Business on Business Talk 1110 AM, KTEK in Houston, Texas, and also usdailyreview.com. Want to talk about the markets going wild, stock being sold like crazy, the dollar plummeting. It sounds very apocalyptic, but hey, in many respects, it's business as usual. We've seen a steady growth in gold over the last few years, particularly since 2008, simply because there's a total lack in confidence in our dollar. And now the federal government has made it perfectly clear that a stable dollar, which had been the long-term objective of the currency for, I would say, since the Reagan administration, and that was stated policy of the Reagan administration, is now in the process of being used as a stimulant to revive the economy. And now people like Bernanke at the Federal Reserve is going, I don't know how much longer we can continue to buy treasuries at this price. Now you're beginning to see interest rates slowly beginning to edge up, reflecting an economic reality. Well, let me tell you what else that reflects. We're now over 20% of the federal government is now spent on interest on the debt. In fact, it's pushing 25% now, and all we're paying is the interest of the debt, not a single penny of the principal. And now, imagine what happens if the interest rate were, say, to double. Whatever were to double, which would probably be nowhere near the economic reality of inflation, which is what the purpose of interest rates are, is to fight inflation. Real inflation is far, far greater than in excess than say, an 8% interest rate. Well, what would it mean? That means we would be spending over 40% of our budget just on the interest on the debt. I don't know any household that can survive in that kind of economic environment. And then you begin looking at this large-scale mass production of currency in order to pay off money, and next thing you know, you're taking a chapter from Zimbabwe. I don't know if you're familiar with Zimbabwe's economic environment, but 80% of the people of Zimbabwe are millionaires. In fact, it's more than that. I think it's over 100% are millionaires. Yet they have 80% unemployment and mass deprivation and starvation. The reason why they're millionaires is somewhere along the way someone thought that if we keep printing money, a country somehow gets richer. That doesn't happen. It's based on productivity in relationship to the amount of money. We're looking increasingly like the Weimar Republic that led to the fall of Germany and the rise of Hitler, where I've literally seen the photos of people sweeping Deutschmarks into sewer drains because the money was so worthless. People carrying money in barrels to buy a loaf of bread. People papering their walls with dollars, or Deutschmarks rather, because it was cheaper than buying wallpaper. That's the kind of insanity hyperinflation leads to. And I believe the United States is already in hyperinflation. Well, how could that be? I mean, we're seeing still relatively low prices in all types of product areas. Look at the core product. Look at your groceries. You're paying somewhere between 20 to 25% more than groceries. And there was a period up until 2008 where profit margins were still relatively high when it came to that. And they wanted to chip away at those margins before they began to raise prices. Well, now it's roughly 25, some places 30% higher than it used to be. And your next response is going to be, yeah, but look at so many other products where actually the prices are less than 4 or 5 years ago. Well, for one thing, that just shows the incredible ability of American entrepreneurs and their ability to drive prices down and to be creative. That's also one of the reasons why we've had such persistent unemployment. But the reality is that at some point, that too much money chasing too few goods, which is the classic definition of inflation, is going to catch up. And I'm beginning to think that the markets are onto that reality, which means looking at gold, looking at precious metals as a way of shoring up your investments, really an insurance against what I call monetary tax, which is what inflation is. What I mean by monetary tax, it doesn't take away the number of dollars, it just reduces the value of the dollars you have. That's my Price Point Edition. Love to get your thoughts and comments. Email me at info@usdailyreview.com.